Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. Dear student, I am Muhammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Uttara, Dhaka. Dear student, today we will discuss chapter 6 and this is accounting for receivables. This is our second lecture. Dear student, at the end of this lecture, you will be able to find out the amount of bad debt expenses. You can give necessary journal entries. You can prepare provision for bad debt account. You can prepare bad debt account. Dear student, let's take an example. Dear student, all of you know that in previous lecture we discussed how we can find the amount of bad debt expenses, we can prepare journal entries, we can prepare different types of ledger accounts. So this class will show you how you can solve the math. Dear student, this is a board question. This question is taken from Dhaka board. Dear student, look at the following information is taken from the books of Ahmed Enterprise. And look at, we have given reserve for bad debt. You know the another name of reserve for bad debt is provision for bad debt or doubtful debt. Recorded bad debt, unrecorded bad debt, reserve for bad debt to be charged, and account receivable. This information is given, and for 2018 this amount, for 2019 this amount, and from this you have to prepare bad debt expenses. You have to prepare, give journal entries, you have to prepare bad debt and reserve for bad debt accounts. Dear student, all of you know that how we have to calculate bad debt expenses. Bad debt expenses. The formula is, you have to memorize formula, dear student. Bad debt expenses, bad debt plus new bad debt plus new provision minus old provision. That means these four elements are formula of bad debt expenses. At first you have to write bad debt, that means this is recorded one, recorded bad debt. Then new bad debt, that means this is unrecorded bad debt. Then new provision or new reserve, then old provision or old reserve. So dear student, bad debt plus new bad debt plus new provision less old provision, these are the formula for determining bad debt and bad debt expenses. Dear student, bad debt for 2018 it is 6000. Look at, if you learn the formula then it is easy. Look at recorded bad debt, that means this is old bad debt 6000. Then unrecorded bad debt, this is new bad debt 10500. Look at here, 6000, 10500. Then new provision, that means we need to calculate the new provision. Look at, dear student, new provision reserve for bad debt is 2.5%. 2.5%, that means we have to calculate the reserve for bad debt. You know that reserve for bad debt is charged on net debtors, that means you have to calculate net debtors. Dear student, how you can find out the amount of net debtors? Look at net debtor into percentage of provision. Net debtor means debtor minus unrecorded bad debt, debtor minus unrecorded bad debt. Dear student, last class we have discussed the way of calculating net debtors. In this math, only debtors and unrecorded bad debt. If there is unrecorded sales, we have to add it. If paid by debtors, that we have to subtract. If discount allowed to debtor, that we have to subtract. In this math only we have two items, debtors minus unrecorded bad debt. So debtor is, look at the question, what is the amount of debtors? 2,26,500, and unrecorded bad debt is 10,500. So the amount of net debtor 2,26,500 minus 10,500, and the rate of new provision is 2.5%. It is 5,400. It is 5,400. Let's come to amount of calculation. Look at bad debt 6,000, new bad debt 10,500, new provision just we have calculated, it is 5,400, and less old provision. Less old provision. Look at the question, how old provision is given. Yes, reserve for bad debt 1118. That means it is opening. It is opening one. It is 12,000. So it is old provision. Look at bad debt plus new bad debt plus new provision minus old provision. So bad debt expenses is 9,000. Bad debt expenses is 9,000. Dear student, I hope you understand. This way you have to calculate. And look at for 2019, same way, bad debt plus new bad debt plus new provision minus old provision. Bad debt, that means recorded bad debt. Look at, in this math there is no recorded bad debt. For 2018 it is 6,000, for 2019 no. And unrecorded bad debt 5,400, and provision is 5%, and debtor is 1,45,000, 400. Account receivable and debtor is same names. Look at the calculation. 1,45,400 and unrecorded 5,400 into 5%, 7,000. That means new reserve is 7,000. New reserve is 7,000. Look at bad debt plus new bad debt plus new provision minus old provision. So bad debt expenses is 7,000. Dear student, all of you understand how we can calculate bad debt expenses. Dear student, for this again I am telling you have to memorize bad debt plus new bad debt plus new provision less old provision. If you memorize these things, just you have to put up the value for each year. Then you will find out the bad debt expenses. And calculation of net debtors also I have shown you. Debtors minus unrecorded bad debt. In some other math, there will be some other adjustment. Inshallah, we will show it in that math also. Dear student, now journal entries. Dear student, the recording process of bad debt is very easy one, because there is a fixed journal for every year. Look at first journal is provision for bad debt or reserve for bad debt debit, account receivable credit. Then bad debt expenses debit, provision for bad debt credit, and next year income statement debit, bad debt expenses credit. This is fixed for every year. Look at for 2019, same provision for bad debt, account receivable. Then bad debt expenses, provision for bad debt. Then income statement, bad debt expenses. And if we do it more years, same. That means every year we have to give same journal. Journal is, that means we have to memorize this journal. We have to keep in our mind. The first journal will be for recording bad debt. It is provision for bad debt and account receivable. Now amount, what will be the amount? Provision to record bad debt. That means old bad debt plus new bad debt, the amount will be this. Look at for first math, old bad debt 6,000, new 10,500, so 16,500 for 2018. Look at for 2019, it is 5,400. Look at how old bad debt is 0 and new bad debt is 5,400. So addition of these two, it is 5,400, and here addition of these two, it is 16,500. So for first journal, 16,500 is the amount. Then second journal is to record assume bad debt. That means to record bad debt expenses. Bad debt expenses debit, provision for bad debt account credit, it is 9,900. And next journal is for closing the bad debt expenses, income statement debit, bad debt expenses credit, 9,900. So for these two journal, amount will be bad debt expenses, and you know that in the math we have calculated bad debt expenses 9,900, and I have discussed in details how we calculate bad debt expenses. So dear student, I hope you understand bad debt expenses, provision for bad debt. The amount is 9,900. For next year, look at bad debt expenses, provision for bad debt, and income statement bad debt expenses. That means same journal we have to repeat it, and the amount only change here, because this year 9,900, this year it is 7,000, this year it is 7,000. So dear student, the amount will be 7,000 this year. So I hope you understand the journal. If it is in for 3 years, same journal. If it is for 1 year, it is for 2 years, same journal. Now dear student, ledger account, and all of you know that in the ledger we have, there are 7 column in modern balance format. So for ledger account, we have to do posting, and you have learned it from 910 how you have to do ledger. For bad debt expense account, look at the journal bad debt expense. In the journal we have bad debt expense, and in this journal bad debt expense. So you have to write the opposite account. Here opposite account provision for bad debt, here opposite account income statement. Look at provision for bad debt and income statement. Then next formula is that bad debt, if bad debt expense debit, we have to write debit side. Here debit side, and here bad debt expense in the credit side. Look at in the math, 9,900 in the debit side and in the credit side, and balance is 0, because debit balance 9,900, then credit balance 9,900, 0. So next year also same way. Look at bad debt expenses debit 7,000, bad debt expenses credit 7,000. In the math, bad debt expenses debit 7,000, bad debt expenses credit 7,000, balance is 0. So bad debt expenses will always shows zero balance. Then provision for bad debt account, here we have opening balance. Look at in the question, we have opening balance, provision for bad debt, opening balance, it is 12,000. So at first you have to write the opening balance, then from journal, look at first we have to write the opening balance. Opening balance, it is 12,000. It is credit balance, it is credit balance. Provision account always shows credit balance. Then from the journal, look at for first year 2018, provision account debit 16,500, then provision account credit 9,900. Look at the math. Provision account debit, it is 16,500, provision account credit 9,900. Then we have to make balance, credit balance 12, debit balance 16. So difference is 4,500 in the debit side, because debit side is greater. Then credit balance 9,900, so difference will be in the credit side, it is 5,400. It is 5,400. And next year with this balance you have to start. And next year what is happened? Look at provision for bad debt, debit for 5,400 and provision for bad debt credit 7,000. Look at the math. Provision for bad debt, debit 5,400, credit 7,000. Now balancing 5,400 debit, credit 5,400 debit. Balance is 0 and 7,000 the balance